Hello, and welcome to this training session on National Financial Regulation B2, Income, Charges and Debtors. Today we are going to go through some of the key details you will need to know from NFR B2. I will be discussing the purpose of NFR B2, income, raising a charge, reporting, managing and collection of charges, debtors, bad debts, the debt recovery process, arrangements for payment by instalment, the collection management process and legal proceedings. In the final section, we will cover donations. What are the National Financial Regulations? The National Financial Regulations are a set of policy documents which set out the financial controls for the organisation. They are not meant to be detailed procedural documents for financial processes or activities, as these are contained within your local procedures. But the aim of the NFRs is to provide high-level controls to guide your local procedures. Why is this training important? It is important that you are aware of the controls and guidance that you must follow when you are involved with income, charges and debtors. NFR B2 applies to all permanent, temporary and agency staff of all HSE divisions, CHOs, hospital groups, Section 38 and 39 providers where services are being provided on behalf of the HSE or where HSE grant aid and funding is being received. NFR B2 sets out guidance on the procedures, controls and processes in place for three areas: income, charges and debtors. We need to ensure we protect HSE income sources, enable efficient collection of income, protect against credit risk, enable acceptance of voluntary donations, gifts and bequests. So the key users of NFR B2 include all staff involved with income generation and collection in the HSE, in recouping of overpayments, in receiving donations, in admitting or booking in patients. It is critical that these staff follow robust controls to safeguard income, optimise cash collection through efficient processes, manage any credit risk effectively, and deal with bad debts appropriately. They need to evaluate and document donations, gifts and bequests offered to the HSE. It is important that you are aware of the key controls and procedures relevant to you and the support materials and contacts that are available to help you in your work. We can't cover everything in full detail here, so there is an onus on staff to read the documents themselves to ensure that they are fully briefed on their day-to-day requirements. The HSE receives its exchequer funding, non-capital and capital from the Department of Health by way of a grant from Vote 38. HSE income also relates to money due in respect of any charge which is raised by the HSE for the provision of all paid services, and we will look at those shortly. HSE income can include donations received from those who raise funds voluntarily for the benefit of the HSE and bequests to the HSE. It also includes income from research and development. Here are some examples of charges and income: private charges, emergency department charges, road traffic accident charges, charges for the non-insured, residential support service maintenance and accommodation contribution. These are contributions made towards accommodation and daily living costs for clients who avail of residential support services. Long stay charges, civil registrations, laboratory testing, rental income, and external secondment income. This is not an exhaustive list, and there are other income sources to account for within the HSE. The same principles that are set out in B2 applies to those additional income sources. It is important to note that it is possible that certain charges should be subject to VAT. Care should be taken to determine whether this is the case or not, and if advice needs to be sought on VAT treatment of different income sources, our colleagues in the tax department can be contacted for any queries or advice around this topic. We move on to raising charges, and we will look at the four main steps to follow when raising a charge. Step 1. You must confirm that the HSE has the authority to raise a charge. In doing so, you must clearly set out the basis for the charge, such as statutory charge or non-statutory charge. You must be aware that the charge may arise from a legislative requirement or from a specified HSE revenue-raising measure. You must be aware of persons who may be exempt from certain charges, for example, medical card holders or patients with specified illnesses. Step 2. You must establish that a HSE service has been provided. You must confirm that a service has been provided as quickly as possible to allow for timely processing of the charge. The trigger for any charge to issue should be clear and obvious. For example, emergency department fees are incurred at the point of service. Every effort to collect these charges at this point should be made. Step 3. You must calculate the charge correctly, including correct VAT treatment. You should only produce the invoice when it is clear that a HSE service has been provided, as in Step 2 above. You must determine whether the charge is subject to VAT and apply the correct VAT rate. You must capture and validate the debtor's contact details through an appropriate system. Step 4. You must raise a HSE invoice properly to the correct person. When raising an invoice, there must be a clear segregation of duties between the person raising the invoice and the person responsible for checking it off as paid. A designated officer shall raise the invoice on the relevant patient administration system as soon as possible after the patient discharge. This time frame shall not exceed 1 working week or 7 calendar days where applicable. You must make sure that the invoice has a unique reference number so that it is distinctive and identifiable. You must make sure that the debtor's details are stated correctly with the person's name and address. You must clearly set out an itemization and description of the charge. You must ensure that the amount of the charge is shown together with any applicable VAT. You must ensure the debtor's payment options are clearly set out as part of the invoice to facilitate efficient payment, such as online payments or postal payments. People who are not ordinarily resident in Ireland and who avail of inpatient services in the public hospital will be charged under Section 55 of the Health Act 1970. Each HSE area involved in the administration of income must document local procedures covering the day-to-day tasks involved in Step 1 to 4 here. It is the line manager who is responsible for ensuring local procedures are in place. These local procedures must define the levels of responsibilities. Next, we will move on to reporting, managing, and collection of charges. When a charge is issued for services provided, an invoice relating to the charge must be recorded on the local finance system in place. Invoices must be reconciled to a charges report, which must support the volume and value of invoices raised. Invoices which are raised in error, which need to be cancelled, should state the reason for cancellation. And to ensure segregation of duties, the cancellation must be approved by a line manager before the cancellation is recorded on the local finance system. It is important that there is a clear segregation of duties and appropriate oversight between the person raising the invoice and the person responsible for marking it as paid. Payment for services which the HSE can charge for should be at the point the service is provided where possible. For services provided but not immediately paid for, the following steps must be followed. An invoice sent to the appropriate and valid debtor. The charge for the service provider must be accounted for in the reporting period to which the charge relates, and the invoice must be properly followed up on through adequate arrangements and systems for the collection of that income. Each location must have in place a standardized and efficient income collection system. All receiving of income should be in adherence with the directive of HSE NFR B5, banking cash and card payments. Care should be taken when collecting debt in respect of vulnerable or at-risk adults. If the client's current capacity is not in question and it is their will and preference not to pay their charge, a care team member should engage with them compassionately on the matter. Where this fails, senior management should be briefed to consider further options such as legal recovery. Under no circumstances should undue pressure be brought to bear on any client. If the client lacks the current necessary capacity to give informed consent that their contribution to care should not be paid for, then lack of capacity must be established using appropriate functional tests. The relevant manager must inform the third party clarifying their obligations where they manage the monies of the at-risk adult. Such clarifications should include obligations under the Assisted Decision Making Act 2015, HSE Safeguarding Policy, and HSE National Consent Policy. If the situation is not resolved, advice should be sought through the Patient Private Property Central Unit. Preference is to avoid unnecessary intervention, but to work with the next of kin in the interest of the client while ensuring client assets are safeguarded and liabilities as agent are appropriately discharged. We will now move on to debtors. Bad debts arise when a debt proves uncollectible from a debtor. All reasonable steps must be followed before declaring that debt is to be written off. These include the potential debt recovery avenues. Any bad debt to be written off above €30,000 must be approved by the Chief Financial Officer, hospital groups, or head of service or function, or head of finance. Known bad debts are written off in the period in which they arise. The local HSE location ensures specific provisions are compliant with the general bad debt provision policy for hospital charges. A formal bad debt review should be carried out by each HSE area at least twice a year. The aged debtor analysis reports should be used as an aid and driver for these reviews. A list of bad debts must be prepared by the 31st of December each year, and backup documentation supporting the provision of bad debts should also be filed. This requirement is essential to produce the HSE's annual financial statements. If a debtor is unable to pay a charge in one single payment, an instalment arrangement where the payment is split into multiple instalments may be considered by the local finance manager or officer designate. The debtor must act in good faith in an instalment arrangement and is responsible for meeting the agreed payments. If the debtor does not meet the instalment arrangement, the matter will be referred to a debt collection agency or legal proceedings will commence. Move on to general debt collection process, which is detailed in this process chart. Looking at the process chart, the oval shape relates to the start or end of the process. The arrows indicate the flow and the diamond shape represents decision making. The chart flows from the top to the bottom and from left to right. At the start of the process, the invoice is issued. If this is paid, follow the arrow to the right and the process ends. If the invoice is unpaid after 30 days, letter 1 is issued. If this is paid, then the process ends. If the invoice is unpaid after a further 14 days, letter 2 is issued. There is a further 7 days to make a payment. If payment is made, the process ends. If the invoice remains unpaid, the patient or nominated representative is phoned to establish reasons for non-payment. If the invoice is paid, then the process ends. If the invoice remains unpaid after a further 7 days, in the diamond shape, there is a decision to write off, refer to debt collection, or legal pursuit. At each point in this process, you will need to use your professional judgment considering the circumstances. Using this information, you will determine if it is appropriate to move to the next step in the process. The general debt collection process timelines are calendar days and are the minimum controls. The HSE retain debt collection agencies, DCAs, to pursue unpaid debts which are difficult to collect through the regular mechanisms. The decision to refer to a DCA should be made by local management in assessing each individual debt and in line with local procedures. Where a decision is made not to proceed with the remainder of the debt collection process, it should be appropriately documented and approved by the head of service. The use of a DCA to collect the debt should be considered in the first instance before any legal proceedings are initiated. The use of a DCA may not be required or appropriate in all cases. For example, patient debt in the community may be of high monetary value, or the patient may have capacity or vulnerability issues to be considered. It is the responsibility of the HSE Legal Service User, LSU, to authorise the start of legal proceedings where it is not appropriate to engage a DCA or where an agency has been engaged but has not succeeded in collecting the debt. Examples of LSUs may include Assistant National Director of Services in acute settings or General Manager or Head of Service within CHOs. Only authorised LSUs may initiate legal proceedings, and an up-to-date register of LSUs is held by the HSE Office of Legal Services. On receipt of instructions from an authorised LSU, the HSE contracted legal firm will commence legal proceedings, and the legal firm will be responsible for overseeing the legal debt collection process, including obtaining judgment and advising on enforcement options. Depending on the nature of the claim for the debt, different statutory limitations apply under which proceedings may be instituted. Careful consideration should be given to cases where the debtor is deceased, as generally proceedings must be commenced within 2 years from the date of death. Legal advice should be obtained at an early stage to ensure legal proceedings are initiated promptly and within the time limits set out in the Statute of Limitations and other relevant legislation. It is HSE policy to pursue debtors for legal costs associated with the collection of outstanding debts. The HSE receives voluntary income in the form of donations, bequests and gifts from people and organisations acting in a charitable way to improve or support the services provided by the HSE. The HSE must treat this income with care and in a manner where the professional integrity of the HSE is guarded appropriately. Staff members need to act in accordance with the Department of Health's Code of Conduct for Health and Social Service Providers. Employees should avoid accepting benefits or gifts of any kind from a third party which might reasonably be seen to compromise their personal judgment or integrity. Staff should report any instances to their line manager, keeping only those of nominal value. Every care must be taken to ensure that any acceptance of hospitality does not influence or is seen to influence employees' duties. Any hospitality received should be of nominal value and disclosed to the employee's supervisor. That there is clear and appropriate standards in place which have been notified to all employees in relation to payment for work on behalf of outside bodies. Where a donation is monetary, your local finance team will be able to assist you with instructions on correct lodgement procedure. Where voluntary gifts, money or assets such as physical property or shares are donated to the HSE, the following assessment should be carried out by the HSE staff member accepting the gift or donation. Are there any conditions attaching to the gift or donation that would be of benefit to the donating party or might reasonably be seen to compromise the organisation's integrity or professional judgment? Whether the gift or donation is intended for a particular purpose specified by the donor, whether the gift or donation is intended for the HSE or for another charitable organisation separate to the HSE. Staff can download the voluntary donation, gift and bequest to HSE acceptance form available at Appendix 13 in NFR B2 to capture the key details of any voluntary donations, gifts or bequests and to assist in the determination of how appropriate acceptance receipts of this would be for the HSE. If it is accepted, a receipt must be issued to the donor and a letter of acceptance available at Appendix 14, and the finance manager must be informed of the details. Gifts of more than €100,000 must be approved by the board of the HSE. General Manager Financial Specialist Region should be notified of all gifts over €100,000 so they can report them to the AFS team to disclose properly in the AFS. Shares offered to the HSE have to be first approved by the Minister for Health before acceptance. Any assets donated to the HSE or assets bought from donations must be included in the Fixed Assets Register. Where the gift or donation or bequest is to the HSE, the funds must be immediately lodged to the HSE bank account. If the donation is for a purpose specified by the donor, the income must be coded to the deferred income in the HSE accounts. If the purpose is not specified by the donor, the income must be coded to sundry income in the accounts of the HSE. Where the gift or donation or bequest is to a separate charitable body, the funds must be immediately sent to the separate charitable body. An official receipt from that separate charitable body must be obtained by the HSE for the funds sent. The funds must not under any circumstances be lodged into a HSE bank account. Governance arrangements for the administration and operation of these funds are a matter for the separate charitable body. All donors must be issued with a signed official receipt for the gift, donation or bequest, in addition to the letter of acceptance. Before the HSE can consider accepting income from voluntary fundraising, the objectives of the fundraising must be set out in writing. The fundraising must be agreed with the Assistant National Director Services, Head of Service or equivalent grade, and approved by the CHO, Head of Finance or Hospital Accountant. A licence must be obtained in respect of fundraising events by applying to the local Garda station on an application form. The completed form must be signed by the Assistant National Director Services, Head of Service or equivalent grade, and sent to the Garda Superintendent's Office for formal approval. The fundraising event may not proceed unless the required licence has been obtained from Garda Síochána. Notice of all voluntary fundraising activities must be given in writing by the Assistant National Director Services, Head of Service or equivalent grade to the National Communications Division at least 2 weeks prior to the event taking place. Participation of HSE staff in the running of such initiatives or the use of HSE resources, either directly or indirectly, must be approved by the appropriate Assistant National Director of Services, Head of Service or equivalent grade. This takes us to the end of the training session on NFR B2 Income, Charges and Debtors. Training and resources are available from the Governance and Compliance team. You can access our training videos on our Governance and Compliance YouTube channel. The Governance and Compliance team can provide guidance and advice on the interpretation and application of NFRs, and we also provide training relating to the NFRs. Our contact details are Governance and Compliance Finance Specialist, National Finance Division, and our email address is govn.compliance@hse.ie. Thank you for taking the time to watch this training session.